you're really fighting against time if you're a bear and you're hoping Bitcoin goes lower. Because if you think about all the players in the space, they're sort of like massive battleships out on the ocean. They take time to turn around. When there needs to be an adjustment, they can't turn on a dime and start buying, but they can make strategic adjustments over a period of weeks and months. And if you look at what's happening, that's exactly what they're all doing. They're adjusting and adapting their strategies to be able to continue to buy, strengthening balance sheets, leveraging assets, making strategic acquisitions. I think orange juice from Lynn Alden is an interesting one too. It's a new model.
Imagine standing on a beach watching a tsunami form miles beyond the horizon. The water looks calm. The sky looks normal. Most people don't see anything unusual. But the few who understand what's happening know that an unstoppable force is already moving toward shore. That's the picture Samson Mow paints for Bitcoin right now. While social media remains filled with warnings about another collapse, another 4-year cycle breakdown, or another wave of selling, Mow argues that the real story is happening beneath the surface. The biggest players in the market aren't running for the exits. They're quietly adapting, restructuring, raising capital, and preparing for what could become the next major leg higher. And according to Mow, this isn't just another cycle. The arrival of Bitcoin ETFs, corporate treasury companies, and massive pools of institutional capital may have fundamentally changed how Bitcoin behaves. Add in capital potentially rotating out of gold and fading AI hype, along with a growing divide between Bitcoin and the broader altcoin market. And you begin to understand why Mow believes many investors are looking in the wrong direction entirely. Today, we'll break down why Samson Mow thinks the 4-year cycle could be on the verge of breaking down, why money may soon flow back into Bitcoin from some of the market's hottest sectors, why AI could create an unexpected crisis for altcoins, and why he believes time itself is becoming the bear's greatest enemy. Make sure to like the video, subscribe to the channel, turn on post notifications, and let us know in the comments whether you think Bitcoin's traditional cycle is still alive or already dead.
So my theory is it's just a self-fulfilling prophecy. People are scared of the 4-year cycle bottoming later this year in October, November, and they're preemptively selling, and that has kind of triggered another sell-off. The only thing that I could think that really impacts us was capital outflow into AI IPOs and capital raises.
You were expecting a capital rotation from precious metals into Bitcoin because, as we know, late last year, we saw this impressive rally of precious metals, which was like this sort of peak. Now, as far as I know, you are expecting the rotation to happen from AI stocks into Bitcoin.
We haven't seen the precious metals rotate into Bitcoin because I think the capital rotated into that same bucket of AI and semiconductors. So I believe both are still likely to rotate into Bitcoin. If you look at gold, it's still doing quite well for itself at 4K. The AI stocks are seemingly fizzling out. Like if you look at SpaceX's IPO, they're down pretty high from IPO price. I think they're at 120 something. I think it's just a matter of the hype dying out and people finding Bitcoin again. And we have seen a massive amount of outflows in the ETFs. But what flows out must flow in. And this week we're seeing the capital flow back in. So it's just people need to follow and chase the latest thing. And then when they see it's not going anywhere, they sell and they go back to Bitcoin. So I think it's still early. We are going to see capital come back from metals, and we're going to see capital come back from the AI semiconductor trade.
Do you see that happening by the end of the year?
It's definitely possible. I mean, Bitcoin is not very predictable. And going back again, if people are worried that we still have to go lower to hit the 4-year cycle bottom, which I think is a bit absurd, because why would it play out exactly the same as prior 4-year cycles if this cycle is materially different with ETFs and treasury companies and the like? So I think people are going to be very caught off guard. Faces will be melted, and they're going to see Bitcoin go, back to 120, 130, 200. and they probably will have missed out because they were so scared that Bitcoin was going to go lower than right now. I believe we're on the cusp of invalidating the 4-year cycle. If we suddenly went parabolic now, or even in October or November, that should be a clear indication that the 4-year cycle is no longer holding. And I keep repeating myself that this is a very different time. This time really is different. If you look at all of the ETFs, all of the Bitcoin treasury companies, they're sort of shock absorbers. So when Bitcoin came down, the ETF prices came down too, and the treasury companies came down too, and it was painful. But now that they exist, they're sort of shock absorbing that pain and cushioning the fall. If they didn't exist, then maybe we would have had an 80% drawdown like in prior cycles. But I think it is different with them in the picture, and they're holding firm. Like some of them are not. The bigger players are holding. Metaplanet is holding. Strategy is holding. Strive is holding. So I think they largely canceled that deep drawdown.
You were saying that essentially AI will annihilate altcoins such as Solana and Ethereum. Can you explain us how would that happen?
Well, we are seeing AI being used to find problems in altcoins because they have massive attack surfaces as they need all this functionality to market themselves. They're what Adam Back calls feature coins. They have a feature and they try to market that feature. One pertinent example is Zcash. I think they used Opus, not even Fable. They used like some lower level AI, and they were able to find a problem where their shielded supply could be inflated, and they've supposedly patched that. But I think a lot of these projects have largely gone unscathed because nobody cared enough. They're too busy launching new projects. With the ease of AI to find these 0 days and vulnerabilities, it may flip the other way, and it would become more profitable to attack these coins and exploit the vulnerabilities than it is to launch a new project. Because launching a new project, you're going into this sea of 90,000 altcoins and meme coins and all this stuff. So I think it might end in this altcoin apocalypse in the near future.
And do you think that Bitcoin is immune to that scenario?
Bitcoin is not immune to vulnerabilities. We have had bugs in the past, but Bitcoin has a unique advantage, which has this Bitcoin development Schelling point where developers are aggregating and focusing on looking and poring over every single line of Bitcoin code to look for vulnerabilities. You have different groups like Brink. They're starting to sponsor fuzz testing, which is also a new novel way of testing to prevent bugs, which is you just throw a lot of noise and see if anything happens. And I think they found some interesting edge cases there. So Bitcoin has this very robust development community, hundreds and hundreds of developers, massive amounts of resources, all focused on the goal of making Bitcoin sound money and the most battle-tested blockchain out there, whereas everyone else just wants to launch their project quickly and make a quick buck.
Samson Mow's argument challenges one of the most deeply rooted beliefs in the Bitcoin market. For years, traders have relied on historical cycle patterns to predict major tops and bottoms. But Mow believes investors may be making a critical mistake by assuming that a market transformed by ETFs, corporate treasuries, and institutional adoption will continue behaving exactly as it did in previous eras, whether or not investors agree with Mow's timeline. His broader point is difficult to ignore. Bitcoin's ecosystem today looks nothing like it did during previous cycles. Entire categories of buyers now exist that simply weren't part of the market a few years ago, creating dynamics that may dampen volatility while strengthening long-term demand. But Mow's outlook extends far beyond price action. He also believes one of the biggest technological trends in the world, artificial intelligence, could end up creating an entirely different outcome than most crypto investors expect. Instead of helping altcoins thrive, he argues AI may expose weaknesses that many projects have managed to hide for years.
What do you see as a primary catalyst for a bull run that could happen relatively soon?
So I've already said publicly that I believe the bottom is in. I think that last stretch to 58 was it. The 58K gang, they were lucky and they're right. Then we saw 58K again, and that is the bottom. But as for what brings us back up, I think it's just a matter of time. You're really fighting against time if you're a bear and you're hoping Bitcoin goes lower. Because if you think about all the players in the space, they're sort of like massive battleships out on the ocean. They take time to turn around. When there needs to be an adjustment, they can't turn on a dime and start buying, but they can make strategic adjustments over a period of weeks and months. And if you look at what's happening, that's exactly what they're all doing. They're adjusting, adapting their strategies to be able to continue to buy, strengthening balance sheets, leveraging assets, making strategic acquisitions. I think Orange Juice from Lynn Alden is an interesting one too. It's a new model, and they're fortunate to be able to come into the market at this price point, in the 60K range. So I think we just have to let the market become bored and stop panicking. In many ways, the market is sort of like a wild animal. When you have a wild animal caught in a trap and you want to help it, it will thrash around viciously and even hurt itself because it doesn't really understand what's going on. But once you free the animal, then it looks at you and it sits there because it doesn't know how to react, because everything was okay all along. And we're already starting to see signs of that. So SATA from Strive, it's already getting close back to par, or the target price of 100. I don't know if they adjusted yet, but they're thinking about adjusting it so they don't necessarily need to issue new SATA shares at $100. So it makes it harder for those that want to short to do so, because they don't know what SATA will do. And I think every action that Strategy has undertaken to strengthen their balance sheet and encourage STRC to go back to par is also working too. But everything sort of works in tandem. So I think as SATA returns to par, you're going to see STRC return to par too, just because people see, okay, this model is not broken. Everyone is capitalized for three or more years of dividend payments. And, I'll just come back because there was no reason to panic all along.
Are you not concerned that this macroeconomic picture could sort of slow down at least your bullish outlook for Bitcoin?
You would think so, but I don't think it does. A few days ago, the conflict started again, and Bitcoin is still at 60 something. It didn't crash. It's a battle between short-term capital and long-term capital, and long-term capital always wins. Like if you look at the treasury companies and their preferreds like STRC, if you have the right thesis and you understand that if Bitcoin goes up, MSTR will go up, then you should be able to reason out that STRC is offering incredible yields if you're buying it in the $80 range, right? You have the effective yield plus the yield from going back up to a par, plus you have the 13%. So it's a massive gain for long-term capital that is able and capable of deploying when everyone is scared. It's the Warren Buffett saying, be greedy when others are fearful.
Mow's thesis ultimately comes down to one idea. The structure of the Bitcoin market is changing faster than most investors realize. While short-term traders focus on daily headlines, geopolitical tensions, and temporary volatility, long-term capital continues to build positions, strengthen balance sheets, and prepare for a future that looks very different from the past. The emergence of ETFs, treasury companies, preferred share structures, and institutional accumulation has created a new layer of demand that simply didn't exist during previous bear markets. According to Mow, these players act as shock absorbers, reducing the severity of drawdowns and creating a stronger foundation underneath the market. That doesn't eliminate volatility, but it could significantly change the shape of future cycles. His warning about altcoins is equally significant. As AI tools become more powerful, projects with large attack surfaces and complex code bases may face increasing scrutiny. Bitcoin's conservative development philosophy, combined with its enormous developer ecosystem and relentless focus on security, may prove to be one of its greatest competitive advantages in an AI-driven world. Most importantly, Mao believes the battle isn't really between bulls and bears anymore. It's a battle between short-term fear and long-term conviction. History has repeatedly shown that patient capital tends to outperform emotional capital, and Mo sees growing evidence that the strongest hands in the market are becoming even stronger. If you enjoyed this video, make sure to leave a like, subscribe to the channel, and turn on post notifications so you never miss an update. Share this video with anyone following Bitcoin ETFs or the future of digital assets. And let us know in the comments, do you think the 4-year Bitcoin cycle is officially breaking down, or is the market simply repeating history one more time? Thanks for watching, and we'll see you in the next video.